So our next session is going to be a very fun one for me, because maybe for the first time in my life, I'll actually be asking the CFO the questions instead of the other way around. So for those of you out there who would like to be in that position, start thinking about what hard questions you want to throw at an experienced CFO, and we'll make sure that some of the questions come from the crowd towards the end of it. So our next guest is currently the CFO at a company called Auction.com. He's also on the board of directors at YouSendIt, and prior to that, he was the CFO at a company that we talked about a little earlier today called SuccessFactors, which, according to legend, had kind of an interesting exit. So we'll talk some about that as well. But please join me in welcoming to the stage Bruce Felt.
Hi, Dan. My name's Ian. I'm Bruce's buddy. I'm going to answer some questions before we get things done here. So I'm glad all these waters are for me. Let's sit down. It's nice to meet you all. Let's do this. Dan, you can sit down and make me feel comfortable.
Thank you. Is it okay if I sit here?
If you'd like. We're in the middle.
You said you're Bruce's buddy?
I'm Bruce's buddy. We used to play in a band together. We also had a hockey team. We've been to Disneyland with our families a couple times. And I answer questions while he's in the bathroom.
All right.
All right, let's do this.
All right.
Fiji water, huh?
Okay.
Probably could have used that during the fire that nobody moved for. Lemmings. Fire alarm went off and nobody moved. Everybody just stayed in the same place.
Because it was...
No, you're
it was so
supposed to be
exciting.
educated people, and nobody left the building.
The content
Everybody was so excited. What do I... Oh, maybe there'll be a gift.
There is an iPad Mini coming
Is there
at some point. Yeah.
what a company. A iPad Mini for everyone to share.
So, are you qualified? I mean, I have a list of questions.
Am I qualified?
I have a list of questions for Bruce. I'm not sure what to do with you.
Well, just ask me a question and we'll find out what happens.
Okay, well, let's talk about that deal at SuccessFactors when you were the CFO.
I was not the CFO. I was the CFO's buddy.
Oh, yeah. Sorry. So your buddy, the CFO, was at SuccessFactors.
He sure was.
And a company called SAP.
He was.
Wrote a check.
Correct.
For $3.2 billion.
Yes.
And how did that affect you or your buddy?
Well, look, how do you think it affects me when I'm in bed and I hear $3.2 million?
Billion.
Well, exactly. I don't work, so I get excited when I hear 3.2 billion or million.
And you got some piece of that?
I didn't get anything. Let's put it like this. 3.2 isn't that big. Is it, sir? It's big. Look who's getting all liquored up for the afternoon session. I can see why people don't move during a fire alarm. $3.2 billion is large in some places. Remember when you went to college and you said how many girls you slept with?
That was Wilt Chamberlain, wasn't it?
No. Remember how many girls you said you slept with in college? Was it really that number? Exactly. That's how 3.2 works out eventually. 1.2. All right, apparently nobody slept with anybody in college. Nobody knows what I'm talking about.
Do you know what a customer success manager is?
I'm one right now. I'm successfully doing things with customers. Does anybody really care about customers? Come on, let's be honest.
Where did you get those shoes?
Where did I get these shoes? There's no need to mock me. I'm mocking you. I'll tell you where you got these from. $3.2 billion shopper store. Customer service, how do you feel about it?
Well, we're obviously pretty excited. All these people came together to talk about customer success, and then see? No offense, but then you came along.
But I heard click, click, click 3 times out there.
That's a big ovation.
Apparently everybody was excited about it. Yes, 1 more, that's 4.
And he's the sponsor.
And he's the sponsor, 5. Those are the people that are hoping to win the iPad Mini.
But that's a wild reaction for a group like this.
For a group like this, you know who I expected to answer very loudly was the guy drinking. But he didn't even move because apparently he took a Xanax with that drink.
And his glasses.
So his eyes are going to be open, but he's not going to be feeling anything. That's awesome.
His glass is still pretty full, so I think he's just getting started.
You think that's really his first one?
So
So,
when do you think Bruce is going to be back from the bathroom?
how long does it take for you in the bathroom? That's a weird question.
Well,
I'm
you're
his
his
buddy,
buddy.
not his servant. I don't know how long it takes for him to go to the bathroom.
Well, I wasn't sure what you meant by buddy.
Oh, well. Sorry, I didn't. Oh. Oh, look at people. People
Oh,
are
boy.
slowly coming to life.
Yeah, see, it's all that.
By the end of this is going to be fantastic. People are going to be excited that they're here. A lot of people are confused, which is a lot like customers.
That's true. That's true. What do you do when your customers are confused?
What do I do when my customer is confused?
What do you do when Bruce is confused?
What are you kidding? We just keep driving. If he's confused, he doesn't know where he is. Oh, I may have just said that I'm his driver, but that's not what I meant.
Oh,
We just keep going until we find another company to buy. Any more questions on your sheet of paper?
there are some.
Any
But
questions that aren't on your sheet of paper that you'd like to
There's
ask
some
right
of
now?
those too, but I don't think
Don't
we'll
be
go
nervous.
there.
This is going well.
Yeah, it's going really well, I think.
Everybody
yeah,
loves you here. I
my-
asked around earlier.
My question remains.
They said Steve is a great guy.
My question remains: is Bruce back from the bathroom?
No,
yet?
he isn't back from the bathroom. I was wondering if some of you could quit typing while we're doing this. Is this supposed to be entertaining? And some of you don't get the point of this. You're like, oh, well, I'll just keep checking my Facebook. That is fantastic. Glasses, what were you typing about right there?
I need to find a way to get 3.2.
Billion.
Okay, because I didn't know if we were
With a
going
B.
back to college and sleeping with people.
We don't know how that point 2 would happen.
What's that, point two? Come
Yeah.
on, sir. We've all had that night. Mr. I don't know what point two is and survived the whole night.
So do you have any questions for me?
I do.
Okay, let's hear them.
Why are you sweating on your lip? You knew this was going to be fantastic. Come on, continue on. We're on the driver's seat now. Is this the first time you've ever had?
Well, you
any-
drive for a living, so you're
I
in
do
the
drive
driver's
for a
seat.
living. What do you do for a living?
Jokes?
Lay one out on the
No,
people.
no, thanks.
Let's see if we can get the clicks to clap at your joke. Now it's your turn. Give
I
them a
think
joke.
they'll click,
give them a
click,
joke.
click
Come on.
if I
give 'em a
don't
joke.
give them a joke.
Everybody wants to hear a joke. How many people want to hear a joke from Dan?
Oh, boy. All right, let's see. My favorite golf joke. Guy's golfing with his buddies.
Right.
It's on the 6th hole.
Yes.
He's about ready to tee off, and suddenly he sees a funeral procession coming down the road. So he stops, he takes his hat off, and he stands right by the fence while the cars all go past, including the hearse. And then he gets back on the tee, and his buddies go, "Wow, that was really reverent of you." And he said, "Well, it was the least I could do. We were married for 35 years."
That was a good joke, but I'm going to say this. This is a tough crowd.
Yeah, apparently. That's the best I got.
You've got better than that. But
I don't think
let's be
so.
honestly about this crowd. We have to get them up into a frenzy before I leave here. So I need to know what we can do to make computer nerds excited.
Well, I think we're at the point where if
The
you
CFO,
guys...
who said that? Nobody gets excited about the guy that's going to
I
control
was
the
just-
money.
No, I'm with that comment. If you guys make a whole bunch of noise, we'll actually bring the real Bruce Felt up
Oh.
here and have a lively conversation with the CFO. Come on, please, please. Thank you, driver.
Pleasure, buddy.
Yeah.
Okay. Are you his buddy? You're the actual real Bruce Felt, right?
I am the real
Okay,
Bruce
let's
Felt.
not talk then.
No, they told me before I came, well, first they told me what time I was going to be here. And I said, oh, that's right after lunch. It's the worst time. They said, but we'll liven it up. We're going to have a guy come up here and be Bruce Felt and see if the crowd ever figures it out. And I said, that's a great idea. The only problem is, what happens if he gives better answers than me?
Yeah, I know.
So anyway.
He really did say that. Anyway, so now let's get down to serious business. I got to get
Sure.
back in serious mode here. And I got to find my glasses or I can't read my questions.
Sure.
So let's start with at least kind of the question I asked your buddy about success factors. You were there as the CFO when
Right.
SAP came along. That's a huge deal in the SaaS world. I mean, you might make the case that behind the IPO of NetSuite and Salesforce, that's the biggest thing that's happened in the SaaS world. So talk about that, and what I'd like to know, if you can talk about it, is what was SAP's motivation other than great customers, great products? Was there more to it than that? Was part of it wanting to be in the cloud world?
Yeah, I mean, SAP, well, yeah, I think it was a great transaction. I mean, and they might have been the only company that I think could buy us, and they kind of came, guys, the perfect time, the perfect price. They came with the perfect sales pitch. You know, and the pitch was, we believe in the cloud, we mean it, we know it's coming. I mean, they were very honest too. They said, look, we tried twice and failed miserably. And what we need is somebody that can inject the real SaaS DNA into ourselves. Mm-hmm. And they said, we think you guys are the ones to do that, right? And they acted that way, and they continued to talk that way, and you know, they put Lars on the executive board, which was a highly unusual move. Because German corporate governance is you don't really have a CEO, you have an executive board that runs the show. And there were 6 of them on it, or 5 before Lars, and they put CEO of SuccessFactors on it. Which is a dramatic statement by them that they really meant it. Mm-hmm. But they saw the cloud wave coming, they believed in it, they just couldn't do it. And so, yeah, the rationale was they would acquire SuccessFactors, they would just integrate in a way where we really learn from each other and really make the cloud their future for software. And just coincidentally, I was just at an event last night, and the numbers that I heard quoted, I don't know if they're public, so I won't say them, even though he told me, were just outstanding. I mean, they were dramatically larger than the numbers that existed just a year ago. So it really is working, and that was really what drove the whole transaction.
And would you say that what they were envisioning, other than increasing revenue and things like that, actually happened? Did it start to formulate a cloud-based thinking, at least in part, at SAP?
Yes, it did. Now, there's 50,000 of them, and that company's been in business for 40 years, so it does not change easily. And in Germany, it changes hardly any, really, at the end of the day. But yeah, they really want cloud to be something that well, first, I would just put it this way. All customers want to buy cloud. There's just not a company in the world that just doesn't, at this point in time, understand the benefits of cloud versus behind the firewall. It wasn't so really even 6-7 years ago with SuccessFactors time. So they really meant it. They know that customers really wanted to, and what they did is they took it to, I don't know, they have about 180,000 customers, all want cloud. So you're either going to give it, if you don't give them a solution, they're going to go elsewhere. So they're just at the very beginning of bringing these cloud products to their customer base, and the numbers that I heard are just staggering. And I don't think it'll keep going, and eventually it will work its way through all 50,000 people, I believe.
Great, interesting. SAP is not an easy ship to turn, so that's pretty exciting.
No, not at all, but it's turning faster than some of the other big guys,
yeah.
You know, that haven't come with the kind of cloud DNA. I mean, my observation is it's very, very tough for them to make the move and make the transition.
So this is a question that is a little bit unrelated to some of the things we're talking about today, but it's always been on my mind, so I'm going to ask it on behalf.
Sure.
For those out here who are afraid of their CFO, what would you say to them?
About what, Jen, specifically?
Well, I mean, I thought this was a great opportunity for me because I finally get to ask questions of a CFO as opposed to the other way around.
Oh, sure.
Because when my CFO would come in my office, that was not all that often good news.
Yeah.
There was usually questions that I didn't have answers to, so I think I'm probably not the only person in the world who wants to hide under their desk when the CFO comes walking around.
Yeah, you mean just what's the best way to approach a CFO?
Yeah, and I mean, it's a little tongue-in-cheek, but I mean, you don't seem like a guy that anyone should be all that afraid of. Maybe if you explain why you ask those questions, what your goal there is, maybe it takes some of the fright away.
Yeah, well, first let me start with, you know, CFOs are humans. Let's just start with that. We generally are, generally speaking, I'd say, are just looking after the best interests of the company, right? The reason why we get a bad rap is we get paid to be, I'll put it this way. Once somebody said, boy, Bruce, you can really be an asshole. And my answer was, well, thank you very much. Because sometimes we're just paid to be that way.
Yeah.
But yeah, we're paid to look after the bottom line, which puts us in a tough position because we got to be cheap with the spending. We have to cause people to justify it. People just don't want to hear about that. But we are looking at the best interests of the company. And I would say, my posture at Success Factors, and I think we're seeing more and more of that, generally speaking, is a very, very pro-growth and pro-spending, right? So I think, the best ways to approach CFOs generally are, whatever the case may be, either I'm going to you or you're coming to me, just what's the business case? Like, why is what you're proposing good for the business? If it's a lot more spending, you don't have to really be afraid about proposing it. If, in fact, there's a business case that's very well thought out. Mm-hmm. And so I think that's how you get to anybody in a company. You just have the rationale and the business case laid out and thought through when you present it. And you will show well, be it to the CFO, the CEO, or anybody else in the organization. So it's all about, do you have a proposal or an answer to what you're doing or what you want to do, why it's in the best interest of the company? And if you're thoughtful about it, I think you're going to get a lot of respect and attention from the CFO and anybody in the organization, mm-hmm. frankly.
So this group and this conference is all about customer success. So mm-hmm. let's talk about that for a second. Maybe back to Success Factors days.
Sure.
How, as a CFO, how did you view that organization? Did you think that was a cost center? Was it a revenue driver because of renewals? And then talk about kind of retention and churn and how that played into the acquisition by SAP. I'm sure they cared about those things a lot.
Yeah, so I think the best way to frame customer success really when it comes to speaking to the CFO is put it in terms of the renewal stream. Because, I'll go back to even when we went public at Success Factors. We went public with minus 109%. That's minus 109% operating margins, not minus 9, minus 109. That's a big number. So how can you go public with that kind of number? And the answer is, it's because when to get a new customer, and I'll put even Success Factors specific terms, it cost us cash on cash, like $1.50 to get every dollar of a new customer. And sometimes that can be as much as $2.50. And then when you put that in accounting terms, it looked even worse than that. So it's pretty clear that you don't have a business. So if you're spending more than and most of that dollar that you're buying, so you're spending $1.50 to get $1 of new customer business, and not all of that renews, maybe 70 cents on the dollar. So it takes 2 years just to break even, sometimes 5. So you frankly don't even have a business model if you don't have your customers renew. So that's at the heart of SaaS. So you put everything in terms of the renewal stream, or flip it around, you put it all in terms of preventing customers from leaving. So when I think of customer success generally, or spending money in this area, I'm usually thinking in terms of why are customers leaving and what can we do about it? And will an increase in spending or a redeployment of spending in a particular area prevent a loss? So when you put it in terms of loss, I will spend this and not lose that really, then that's how you make the case. So I think of it not so much as cost center, more on the revenue side, although revenue in an odd sort of way, it's the prevention of the lost revenue. Mm-hmm. And then you can start putting metrics around that. Like how many, what's a normal run rate of losses? how do I improve that? What's the cost to improve that? And then how do I allocate them on all the knobs that I think make a difference? So I think it's extremely important to focus on that and kind of reduce churn and therefore increase renewal rates, because it really gets to the heart of the health and the financial drivers behind what makes a company valuable. Does that make sense?
So one of the things, when I ran the customer success team at Marketo, and I also had the renewals team, so I actually did the renewals forecasting. One of the things that fascinated me was how much time and effort and science went into doing sales forecasting, but how little of that kind of thing was applied to renewal forecasting. Was that your experience as well?
Yeah, there is there's so much focus on getting net new business. And maybe it comes out of the perpetual license world, right? Perpetual license world, you have all the sales efforts, you get the deals, and maintenance comes. And you don't even think about it that much. I mean, maintenance is like, you kind of expect it to come, and there's not a lot of effort in it, although there ought to be because the same case is made. But in the SaaS world, it's much more impactful. To not have companies renew is frankly devastating, much more devastating. So you really do have to focus on what it really takes to make sure that you are, investing in, again, making sure that, they don't leave. And yeah, there's not it takes, I think SaaS companies now are kind of figuring this out, but at the beginning of SuccessFactors, it was all about getting new business and keeping customers, so indirectly, getting new business and keeping customers satisfied, which kind of resulted in high renewals, and I think in the first few years, there weren't any losses at all. But you really ought to apply the same, I would say, mechanics and logic and forecasting and analysis on the renewal stream, or certainly customer losses as much as new business. I think it's just as important. I think companies are starting to do that more and more because they just realize how important it is. But it's easy to get distracted by getting the new deals, since they take so much effort and they're it's so much more exciting than to prevent a loss. But financially, it's just as important to prevent the loss as it is to get the net new deal.
Yeah. Did you ever have customers that you didn't want to keep? Did you ever track it that closely and say that's one we don't need?
Yeah, the biggest ones I hated. They made your life so miserable you could hardly stand it. But you kind of had to have them.
Yeah.
And we never, especially the big ones. I mean, there's the big visible ones where, you were fundamentally married to each other. So whether you liked each other or not, you were stuck. Each side was stuck. Because once you committed publicly to something, and we had some very large ones, they were stuck with us and we were stuck with them. So we made the best of it. And we turned them all actually into very successful customers in the end. On the smaller ones, and by the way, so those that don't know SuccessFactors, it was very strong in enterprise, and we were working our way down as opposed to going from SMB up. So we really started with the largest ones and started working our way down. On the SMB side, that's where you get to a point where you really do have to trade off, can I even afford to service the customer? So there you get more into programs and decisions about programs and what you will and will not do for a customer. On the enterprise side, you're kind of stuck with whatever they want to do. But on SMB, you get more kind of discretion on what you can do.
So, Bruce, when you had vendors who were probably SaaS companies who sold you products, at what point, if at all, would you get involved in the renewal process for that product? Or was that always owned by the business person who used that? And did you demand some kind of an ROI? Or because we're all in that world where we're trying to get our customers to renew. So we want to know what the CFO's perspective is on that and how involved, if at all, you got in those kinds of things.
Well, as as a buyer in the accounting and the finance department, we only bought SaaS and only did not buy SaaS if we didn't have a choice. I mean, In fact, the only non-SaaS product we had was Hyperion, because I hired a couple guys straight from Hyperion. And there really wasn't, at the time, an alternative solution. And now I think there's Host and Adaptive and probably other ones. And even the Hyperion guys hated Hyperion from the standpoint it was behind the firewall. So we were all big users of SaaS products. And now at auction, it's 100% SaaS. I mean, don't even come to me with something that's not SaaS. I'm just not putting up with it. But I would say, so at least as a buyer in my group, and we maybe had five to seven SaaS applications. Yeah, the renewal was important, and every time the renewal came up, we asked for something. We treated it very seriously, as did the vendors, because we knew how important it was for them to get the renewal. And, we'd have a healthy exchange about, what the right deal is going forward. So we did that. And then likewise, I would put in place amongst all the departments, just when a renewal came up on anything, is you need to go ask for something, because it's not perfect for sure. And they could be doing better, and the squeaky wheel does get heard. And so they would go out and generally would spend time making sure that we got the best deal possible. Usually we did it with the thought that a deal could be struck and we'd have a great relationship going forward. And sometimes they got pretty tough discussions. But yeah, we used the renewal opportunity aggressively, which I would say therefore argues for those that are in the business, you want multi-year deals? Because what we would do on our customer side, we'd never do on a vendor side. Like, we always demanded 3-year deals. They wouldn't have to pay up front, just 3-year contracts. Because in the large enterprises, you just had to have that much time to make sure the relationship worked. You couldn't afford to have 1-year deals. By turning it around, when I'm buying, I don't want to buy multi-year deals. I mean, I just want one at a time. Because I want 3 bites at the apple with a vendor. Right? So, I'd say just audience, keep that in mind. You kind of want to play that arbitrage yourself, for the same reasons. You want to lock in the customers and not have to deal with it. And there is no pricing, power, and enhancement argument that works just for you as offering your customers just 1-year deals because you have most flexibility. I'd say throw that argument out of the table. You want to lock them in and not have to worry about them for 3 more years.
So any questions from the crowd? I know there are. I know some of you have been aching to ask questions of the CFO. So I think do we have mics, or are we going to just shout it out? Looks like we're going to shout it out. Dave, go ahead.
So you're obviously in the enlightened CFO crowd, but like back to more, and we're in the early adopters, the lunatic fringe or whatnot. I don't think most CFOs yet get the notion of the value of customer success in order to drive enough revenue. I mean, what do you see in terms of the trend of your peers, of people, CFOs who are running SaaS businesses, understand the importance of retention and customer engagement analytics and customer success? So what do you see the trends here?
Well, SaaS is kind of new. And, I guess those that are getting introduced to it the first time, I guess, could miss the point that this renewal stream really matters. But it's hard to imagine they could be there now, because investors pay up. They pay up big time for SaaS, but they do it only if it's a healthy business that's going to renew. And so maybe it's just a framing issue, because I'd have a hard time believing in a CFO that really understood the business could ignore the importance of a renewal stream, because they will feel the pain as a public company for sure, but maybe not even public. They will feel the pain from either the public investors or the board if the renewal stream is just not where it needs to be. They will feel.
Aren't using these tools today. I mean, the market is just barely penetrated, so what's going to take to use the tools, not just understand the importance of retention.
Yeah, when you say use the tools, you mean?
Like Phil was talking about here in this customer engagement management tool, in order to optimize the
Yeah, I think he's talking, Bruce, about the application area that we're in at Gainsight and others are in as well. That's like an application that helps companies understand their customers, how they're using the product, how are they scoring on surveys, all sorts of things that start to help you gauge the health of that customer and potentially predict churn or predict renewal.
Yeah, so, I mean, you want the data, right? So the case to be made there is you got to know the data, right? And it starts with the basics. What's your renewal rate, or who are you losing, right? And I mean, the case I think is pretty easy to be made that if you are losing certainly more than you should, or you can point to a peer that's doing better than you are, that you need the tools to help figure out why. You know, be it surveys, analytics, benchmarking data, whatever the case may be. You also want, I guess you also as a a total theme, you want to know all the knobs that can be turned to really kind of understand and help react to. Because there's a lot of service offerings you can have that help this. There's a lot of, there's engineering things you can do that help, certainly, customer retention. We had, I think, the most talented people in the whole company on the SWAT team. I mean, it was like the killer sales team. It was just on, prevent the loss, not get the deal. I mean, they had incredible patience and enablement, ability to engage with customers and get them to strategically re-engineer their whole relationship. It was incredible. So, any tools that kind of help you understand that and help you place the bets. There's anything that helps a CFO, for example, know where the money should go, because there's all these choices. There's professional services too. There's what we call platinum engineering, like one-off engineering that they pay for. There's like a whole portfolio of things. So, if you can help the organization understand how they can cut down the lost customers and how to better deploy the resources, that's very valuable. And so that's how you make the case. You say, look, you need to know the information. Generally, these don't cost a lot of money. I don't know what the price tags are in this room, but it's probably not that expensive. So, you just say, hey, we need the information, or we need the tool, or we need the program, or we need the data, whatever the case may be.
Any other questions out there? There's one.
So that's for the tool. How do we get more budget for customer success in general? What do you really want to hear in order to give us a little bit more budget to work with?
Yeah, so, I'll just pick a number. You're losing 10% of your customers a year. Maybe it's 8% of the dollars. I don't know. You say, look, I want... We can be bought, but no, I'll put it this way. We will accept gifts, but it won't change the outcome. But you propose, for example, I can get the renewal rate from 90% to 92. And here's my pitch, right? Or see these 5 customers that we lost? Here's why. And here's how we could have prevented it. And here's the spend. It could even be a fight for somebody else's money. It need not be net new. Say, look, we're wasting money in professional services. It ought to be customer support frontline. Or we have too much customer support frontline. We don't have enough level 2, level 3. Like, we just can't. We understand the problem. We can speak to the customer about the problem. We just can't solve the problem, right? Or it could be relationship management. We just don't understand. We don't know what they're saying. They had a use case that we really didn't contemplate, and we can't get our hands around the use case. So, it's worth your while, I would say, as a group, learn all you can about all the touch points and come up with a theory or conclusion on your own of what a better redeployment or deployment of resources might be, because it need not always be net new. A CFO is always going to be much more open to, within the spending envelope, just moving things around. So you say, look, it's better optimized this way. I think we're out of balance. You could get a lot of money that way if you figure things out, because that's not a high friction ask, right? It's when you ask for net new, that's when it's harder. Now, it doesn't mean you can't do net new hard, get it, because those 2 points compounded is worth a lot of money. And if you say, look, at the end, we're all better off if I can save those 2 points and we should have a net new spend, I'll listen, as I think most CFOs would listen. Does that answer the question? Yeah.
So just a quick follow-on to that, Bruce. If somebody, let's say customer success comes to you and says, I can move it from 90 to 92, I just need 3 more people. That's not a good enough argument for a CFO. It's got to be deeper than that, right?
Yeah, explain why and how. And I mean, we'll also start with, I know the guy's pitching me, so I don't know if I can believe him. I particularly do that with software vendors. I've yet to have one come to me and say, I'm going to cause you to lose more money. They always say, do you want to save money? Always.
Yeah.
Since 100% of them say it, and I know 100% can't solve the problem, I know there's some liars.
Or delusional.
Or delusional. Or they believe what they're saying.
That's right.
I mean, I've seen that lots of times. So yeah, how's that the case? Show me the data that supports that those 3 people will cause that outcome to happen. And the data could be, in the past we had something that worked. A similar situation that I saw work. Maybe it specifically comes from a customer. Like if they said, had you only done this,
yeah,
that would have happened. Mm-hmm. So yeah, some analytics behind it that support the case, not just a commitment from you. Of course I want the commitment. But you might believe your own story and it might not hold true. So show me the information or the case. That's why I said, come up with a well thought out case. What's the kind of the data, the story, to support your argument that these 3 people will create that outcome, right? It's easier in sales. These 3 people will have a quota, blah, blah, blah. But even that I sometimes question, because I've doubled down on a sales force and had revenue go down before. Like you double the sales force and total revenue goes down? That can happen. So, but it is harder on this side of the equation, but it's just as critical.
Yep. We've got time for a couple more. I see some other hands up.
You said your cost to acquire a new customer was $150 to $250. Did you have a similar metric on the retention side for the cost to retain? And then secondary question is, what other metrics did you track and their specific values on the retention and churn side? As example, we track trailing 12-month monthly recurring revenue, churn, and retention. So interested to find out what other metrics you tracked and what their values were.
Yeah, I mean, we did something at SuccessFactors that was unique for the time. I don't know if anybody's done it, but we literally put in our S1 what the profitability of the renewal stream was. So we did like time studies and timesheets and interviews, find out how much it cost. Now, this is on a fully loaded basis, so kind of heavy-handed. How much it cost to support the renewal stream? Anybody want to guess? How much do you think it cost? So we came up with. If you read the S1, you're excluded from answering this question. But that was a long time ago.
Under 10, probably.
Under 10%? Actually, the cost was higher than I would have thought. Because there's a total cost to support a customer over, we did a multi-year period, it was 32%.
That included everything post-sale?
Everything post-sale.
Okay.
Now, clearly the cost of professional services, any new engineering work, customer support staff, and it had like full overhead allocation. So that was super heavy-handed. It's probably, a lot less than that. But we did the work, and the one thing, and what we did was, we took the class of 2007, all the new customers we had in 2007, and we tracked all the costs and all the renewal rates up to, when we went public. And I'm sorry, not 2007. Yeah, it was a class that we tracked for 3 years, all costs. And we found out the unit renewal rate, the dollar renewal rate, the cost. We didn't put all that in the S1, but we did pitch, look, this renewal stream has 70% operating margins. So when you think, even though it seems like a high number,
Yeah.
but when you say 70% operating margins, that's kind of high. And we put in the S1, and so we pitched, how could we go public at a minus 109% operating margin? We said, well, all we're doing is it's hiding the fact that we're building up this 70% operating margin stream. So we pointed to that. We're building that up, and as long as we renew at a good rate, that means we're protecting that asset. Therefore, the case was made, invest in us, and it worked. And so, yeah, we on an ongoing basis, we track, continue to track the cost. Basically, if it wasn't to get a new customer, it generally fell to the renewal stream. There wasn't much in between. So everything else went to renewal stream, and yeah, we tracked all the metrics, how many customer support staff, dollars per staff, the renewal dollars against the costs. I mean, every number that we could think of on just to help us understand better how well we're doing and could we do better. Spent a lot of time on the losses. Why did they lose? What buckets? We had a pie chart. We always looked at it. What can we do better? Was anything related to a product? Was anything related to competitors? And by the way, the ending answer tended to be either M&A or the sponsor left. The worst situation was you sold it and the person that bought it just isn't there to do what they had in mind. That's like the worst situation. But even there, we brought in the Green Beret to go kind of save. So we really got to an early warning signal, just turnover in the company we bought to. Forget the data, like by the time they aren't using it, you might have already lost the war. So we started to get pretty smart about what's going on in the org. When there's high turnover, particularly within the group that we sold into, that was a serious red flag that really started to get us to mobilize to find out what we could do to make sure that the project was not at risk. So that ended up, that you learn over time. Again, you can't wait until you get the bad call, like we did something else or we aren't using it.
Yeah.
By then, it might be too late.
Yeah. So we've got time for one more. I saw a hand up over here.
One of your roles is to protect valuation of a SaaS company, and I'm curious how you thought about when somebody came up with a new idea to expand into a new market. Maybe it was up market, maybe it was down market, but ultimately it came at different cost structure than you have today. How did you think about the marginal utility of that new customer when it compromised your margins and therefore hurt your valuation?
Yeah, we were a company that didn't know how to say no to anything. We said yes to every crazy idea out there. But what I thought we were good at was we'd say yes to everything, but we would when we said yes, we would try to define what success was and whether we were tracking to it. And if we weren't, we'd pull the plug really quickly. Because we were expanding geographically, boy, that's expensive. To hit Europe, to do a two-front war with Europe and Asia. So that was expensive. We were expanding downstream. So we're big at enterprise and we're going down to small. And we were building out all kinds of new product. And all those cost money. And we did not want to forego any one of those kind of vectors for growth. So we invested in them all. But I'd say the way we dealt with it was had enough money to do a little bit of everything, be prepared to lean heavily into something that looked like it worked, and certainly pull the plug on something that wasn't working. So for example, we kind of were pulling the plug on the very smallest customers. We don't think in the end we had the right solution at the time, but not pull it completely. We just kept the experiment going until we got it right. So, we were really, really good at that. And then at one point in time, we did have to consider whether certain opportunities were so great that we had an obligation for the long-term health of the business to spend into it against our Wall Street commitments. And we were down to a point where we were toying with, we're going to go back on some of the margin targets that we gave because we couldn't afford to let the opportunity get beyond us or pass us by. So sometimes you get into that spot too where where for the health of the long-term health of the business, you may have to go backwards, even though you really don't want to. But again, you have to have a very, very compelling case why you would do something like that. But it's tough. It's not easy. So try to have enough financial wherewithal to be able to invest in all these things. And I'd say, as a company, be flexible, be smart, act fast, pull the plug quickly. But I would definitely, I think the model of experimenting a lot and learning a lot and finding something that works and then going for it is a great way to go. And so I'd suggest that. But you got to be really quick on your feet and know what you're doing. Yeah.
Great. Well, unfortunately, we're out of time. Bruce does have to take his mic off, so he'll be walking back that way. And then the escape hatch is over here. So if you have questions, you might be able to catch him somewhere along the way. But please join me in thanking Bruce for joining us today.